A decision on interest rates could be announced today as the Federal Reserve wraps up its first meeting of the new year. With inflation coming down and the economy holding steady, will the Fed keep rates stable or even lower interest rates this time around? Everyone from financial gurus to the average saver is waiting to see what is in store for 2024. Joining me now to break it all down for us is Greg McBride, Bankrate's Chief Financial Analyst. Good to see you.
Good morning, Mary.
So the question on everybody's mind, will rates come down in March, or will the Fed keep their options open? I mean, have you heard anything going on into this afternoon's meeting?
We're not going to get a decision on rates at today's meeting, but we might get a little bit of clarity as to what that timetable looks like. March seemed a little far-fetched a few weeks ago, but some of the recent economic data, particularly inflation coming down, that's still a possibility. I think what's more likely is probably second quarter, maybe May or June. The bottom line is this: interest rates took the elevator going up, but they're going to take the stairs coming down. Yes, we do expect rates to come down this year, but it's going to be pretty modest relative to the sharp increases we've seen over the last 2 years.
Well, for months we've heard about the threat of a looming recession, but those fears seem to have subsided. Is the so-called soft landing more possible now than we may have thought?
It certainly is. The odds of that have increased dramatically in recent months, and at the same time that the likelihood of recession seems to have diminished. Now, I wouldn't say we're out of the woods completely, but the odds certainly favor that very rare combination, that so-called soft landing, where the economy continues to grow and inflation continues to come down closer to that 2% level.
Yeah, to many people's surprise, too. So lower interest rates would lead to lower borrowing costs for consumers and businesses. Does that mean 2024 would be a good year to buy a house, buy a car? I mean, how could the everyday consumer take advantage of this?
It will be better than 2023 in that respect, because we saw rates going up very sharply over the last 2 years. This is going to be a transition. Rates will be peaking, and we'll see those pull back. Things like mortgage rates, for example, peaked at 8% back in October, already below 7%. I expect we'll see mortgage rates trend lower throughout this year. We'll probably finish the year well below the 6% mark. But we're not going back to 2021 levels either. So I think it will be marginally better, but we're still going to be, I think, in a relatively high rate environment, even at the end of the year.
Greg McBride, Bankrate's Chief Financial Analyst. Thanks so much for joining us this morning. We appreciate it.
Thank you, Mary.